Investing with a twist. It's a simple yes or no when it comes to Kalshi, a CFTC-regulated exchange that allows investors to trade events like stocks. The group has offered over 2,000 markets since opening the exchange in July 2021, with over 10 million contracts traded a month. Let's look ahead to 2023 with Kalshi's co-founder and CEO Tarek Mansour. Tarek, good to see you in studio here. Before we even talk about next year, how does this platform work?
Yeah, it's super simple. So Kalshi is it's a CFTC-regulated exchange, the same thing as the CME or ICE, who owns the New York Stock Exchange. It's an exchange. The only difference is that we don't trade on traditional assets like equities or commodities or other. People are trading an asset called event contracts, where the underlying is not your typical stock or bond. It's the occurrence of non-occurrence of an event. So it could be on things like economics, like inflation or Fed decisions, geopolitical events, climate and weather, and a variety of other things.
So when it comes to things like we talk about all the time, right? Like CPI coming up this week, the Fed decision coming up this week, the predictions, I believe, for those two events are pretty much in line with the market. How often do you see divergence from conventional wisdom or conventional markets and what you see on Kalshi?
It's actually pretty phenomenal. I was looking at the numbers. So for inflation, you have two main numbers that Wall Street looks at today. There's a Bloomberg Economist survey that comes out, I think, 1 to 2 weeks ago. And then there's the Cleveland Fed Nowcast that came out at 10 a.m. today, I think 30 minutes ago. So right now, Nowcast is at 0.47%, and the Kalshi markets are forecasting 0.3% for November inflation. So there's quite a bit of divergence, around 0.2% difference. And so we are forecasting lower than expected inflation, lower than what the market is expecting. And just for, I guess, the sake of credibility, we've been more accurate 10 out of the last 12 times than any other data points that Wall Street looks at today.
What is the appetite, or is there an appetite among your end users for being able to look at even like cryptocurrency events? There have been some significant ones, of course, with FTX most recently. If there were other events, halvenings, or some of the expected occurrences that they could have a position on, what would that look like in the future?
Absolutely, yeah. So I think there's two ways that this has manifested. Our users did ask us about halvenings or forks or these types of sort of core events that impact the ecosystem more broadly. And the second, actually, funnily, the second use case that for a year a lot of our users have been sort of pounding the table, we want this, is being able to short cryptocurrencies easily. Well, because today it's not super easy to do that if you're not crypto native, so to speak. We have not touched crypto yet as an exchange. We can talk a little bit about this. Our ethos has been fully regulated from the start, and we're going slow and steady with respect to new assets.
With regards to what happened to FTX, what, if any, impact has that had on your business?
It had no impact. So for a little bit of background, so Kalshi is a fully regulated exchange. We're regulated by the CFTC, the federal government. We actually took 3 years to get regulated up front before launching any market, and that has been sort of Luana, my co-founder, and I we've been very, very focused on doing things right from the very beginning. And it's really interesting because it's really in those times that those types of decisions actually bear an impact. Because a year ago, sometimes you question what is the purpose of regulation? What is the difference, right? When you see a lot of exchanges, notably FTX and others, climbing the climb that they've had and a lot of volume, and there's a lot of zeitgeist and excitement. People don't really care about regulation those times. It's really in these times when people come to you and ask, "Where is my money?" And you tell them it's in a CFTC-regulated clearinghouse in a segregated member account with proper oversight and audits from a federal regulator, that people care and people feel comfortable. And our growth has been better than ever, and people feel very safe keeping their customer funds with us.
So just to sort of break down and explain what you're talking about. So you guys are a CFTC-regulated exchange, and then you have a clearinghouse that clears your trades. The clearinghouse is actually an FTX-related entity,
Correct.
But because it's a regulated entity, it's still operational, and it's not seeing the same sort of spillover
Exactly.
that some of the other FTX entities have seen.
Precisely. So it's very interesting. So the entity is LedgerX. LedgerX was acquired by FTX back in fall 2021. LedgerX has been operational for 7 years now. So LedgerX, interestingly, is one of the, or maybe the only, I don't have the full data, but I know it's one of the very few fully regulated entities that FTX owned. So contrary to popular belief, even FTX US is not regulated like LedgerX. LedgerX is regulated by the CFTC. They have balance sheet requirements, customer fund segregation requirements. And as you see, pretty much all the FTX empire went into bankruptcy. LedgerX is one of the caveats. LedgerX is still fully operational. They're serving their customers as usual, and the executive team is there as the highest level of integrity. So it's been great working with them.
What are some of the most popularly traded event contracts that you have on the platform right now, and how does that build up the target audience that you're even expanding into? Because are you in beta right now or emerging from that right now?
Yeah, so we're launched. The growth has been amazing. A lot of the customers we're getting is traders, Wall Street traders. Some of them are individual for their own personal account. Others is smaller funds, up to some of the bigger funds that you might be familiar with. I think so currently today, actually, our most popular market is inflation. And it really ties to usually where trading volume is, it's where people's worries and concerns are. And I think inflation has been really top of mind for a lot of people. It has had a lot of impact. We've had a peak this year. We're starting to see the sort of tapering. And the interesting thing about inflation in terms of differentiated product is that there's no easy way to trade on short-term inflation today. The only way is to set up an ISDA with a bank. Super expensive process. There's lawyers involved. Takes a few months at least. And on Kalshi, you can just sign up a few minutes and you can put on the trade. So it has been a very exciting market.
Finally, just quickly, I wanted to ask you, not directly related to FTX, but just what we've seen in the market, right?
Sure.
In the public and in the private markets. You guys are a startup. Has it been tougher raising capital? Like, what's the environment like right now?
Yeah, so we're very well capitalized. We're very lucky. We've raised, much. We have close to 10 years of runway right now as a company. Very healthy financials. What I would say is what we see from peer companies is obviously the private market has tightened. We have seen kind of an unbelievable wave at the end of 2021, beginning of 2022. Capital was very, very cheap and it was very abundant. And you could see that a lot, especially with crypto companies. So peer crypto companies were raising at record valuations. I do think that the private market's appetite has largely lessened now. And people are looking at a lot more closely at valuations. We are not raising, we're not in the market, fortunately, but for some people that are in the market, it's definitely tougher.
Yeah, it's a good place to be for you guys. All right, Tarek, good to see you. Tarek
Thanks for
Mansour
having me.
is co-founder and CEO of Kalshi. Appreciate it.